We did publish our new climate action policy in the beginning of the year, and we did set. First of all, we laid out what the current situation is in terms of our climate profile, and of course, large part of our climate footprint comes from our lending activities to our clients. And in that report, we also then set targets, 2030 targets for the most high-emitting sectors, ranging from shipping and cement, steel, power generation, but also oil and gas. And I mean, our goal is, of course, not to get rid of clients. We want to support clients in their transition, provided they have sufficiently ambitious transition plans. And for most sectors, this is quite possible to actually draw the line on what is a sufficiently fast transition. But upstream oil and gas is particularly difficult. It's really difficult to tell when an oil company is transitioning fast enough. And we then set criteria for that, where we demand or expect our clients to have ambitious targets for their own decarbonization, but also their scope 3 emissions, so the oil and gas that they produce. And in addition to that, we also then said that we would not be financing oil and gas companies that expand into new oil and gas fields. So that's aligning with the IEA's Net Zero 2050.
But what enabled really that new policy?
And I'm just about to come to that. So there's two things really driving it. First one is that we have, of course, made commitments that we want to align our portfolios with the Paris Agreement. And that's one of the drivers. The other one is really financial risk. And it's not so much that we would be worried about the credit risk in these oil and gas companies. I mean, they are doing great and really striving economically. However, as a bank, we renew our loans to our companies roughly every 5 years. So there's a refinancing risk, because typically any company would have between 10 or 2 and tens of banks in their core banking facility. And if you as a bank want to exit, then somebody else needs to take your place. And if you don't find somebody to take your place, or if the company doesn't find anybody to take your place, then you're likely to have to continue with that. So there's a refinancing risk, and that's also one that we wanted to avoid and really choose our own point in time when we exit this sector.